For analysts and investors, the cycle is one of the most underutilized and rewarding resources of information. If the reversal can be predicted and tracked in the real time, it will undoubtedly be something that enthusiastic investors don't want to miss. Hi, I'm Eva. Welcome to my today's episode. Today, I will talk about the market cycle.
Market cycle.
On 8th of the Bogu International Investment Forum, they took the essence of the 7th Autumn Forum and continued to dig deep into the details. They invited Mr. Bill Sarubi, a famous cyclical analyst in Wall Street, to further explain the cycle prediction reversal and the real-time tracking of the trends changes. Years of study and work experience have convinced Mr. Sarubi that the biggest problem of the poor investment performance is lack of opportunity. Why do we learn cycle? Fundamental analysis and other technical analysis can predict a lot of information. So, why should we study the cycle? What do you want to know most during the transaction? Perhaps the most answer is when to buy and when to sell. A wise man once said, "Don't tell me what will happen because I know what will happen in the future. What I really to know is when it will happen." If you want to predict the time of a certain situation, you need to draw a conclusion by a study of the cycle of the situation. As a trader, to study the most appropriate time to buy and sell, we must study the market cycle. That's why we should learn the cycle. What is cycle? Cycle is a regular rhythm which starts from the past to the future. It exists in nature, human society, and the market. It can be divided into static cycle and a dynamic cycle. Static cycle tend to remain constant. For example, the US stock market tends to rebound in spring and reach a high in autumn. After the high point, the market enters a weak and sluggish state, usually reaching the bottom in October and then rebounding strongly in fourth quarter. This is a typical market state cycle, also known as a season cycle. The static season cycle of the market seems simple and easy to capture, but why do many cycle analysts miss it? One secret is that they misunderstand this particular cycle. The cycle comes from the calendar, which is derived from the relative position of the Earth and the Sun. Earth and the Sun are in elliptical orbits, so the cycle is elliptical, not a standard cycle. Most of the cycle program codes adopt the cycle of the circular motion, which is not in line with the actual orbits of the Earth and the Sun. This is one of the reasons why the prediction using the cycle will be wrong. If you know the exact price cycle, can you make money by trying to trade them? The answer is no. Mr. Serby used the trend of the XLE Energy Fund to explain why. This cycle indicates that the current night value has increased and will continue to rise until around April of 2022. At present, the net worth in a cyclical upward trend. Net worth will fall in late May and June. Around the beginning of August, a second net worth rebound is expected. then the net value continued to decline until the end of the year. As can be seen from the figure, the fluctuation of the cycle only predicts the general trend of the net value, but doesn't predict the rise and fall range of the net value. Is psychoanalysis only applicable to the stock market? No, it isn't. Psychoanalysis technique can be well applied not only to the stock market, but also to other financial products. Take crude oil as an example. In the same way, the black line is the price of the crude oil per barrel. It can be judged from the gray cycle line that the price bottomed out of the second or third week of January 2022, and then the price rebounded to the May. After the price rebounded, it fell again to about the end of the June. In July and August, price rebounded and then retreated to the end of the year. Is there any other method to support the conclusion of the dynamic cycle prediction? In this speech, Mr. Sarubi confirmed this through the season cycle of crude oil. As shown in the figure, the expected rate of return in January 2022 is negative, and actual price indeed weak. The expected rate of return in February is higher than that in January, indicating a rebound in prices. The expected rate of return in March is higher than that in February, with a possibility of a continuous price rise. The expected returns in April and May 2022 are at the highest level of the whole year, so this rebound is likely to continue to rise until April to May. In other words, every year tends to rebound before May, and there is a great possibility of high returns in April. The expected return in June and July were lower than those in March and showed a downward trend. It's predicted that the price may start to fall after April or May. In August, the price is likely to rebound again due to the sharp rise in the rate of the return. The expected rate of return in September is lower than that in August, and the rebound momentum is insufficient. In October, November, and December, the expected rate of return data are not ideal, with negative or lower values, indicating that the price is going down all the way. Yeah, that's all kind of for today. If you like my content, subscribe my channel. Bye, see ya.